Recently, I came across a video that showcases the 20 best indicators on TradingView in 2025. At the 5th place, I saw an interesting one, a modified version of the SuperTrend called Pivot Supertrend. If you are not familiar with the SuperTrend indicator, the original SuperTrend uses the average true range, or ATR, one of the best indicators ever made in my opinion, to generate buy and sell signals. On the other hand, the pivot-based supertrend uses pivot highs and lows or swing highs and lows to give supposedly more accurate entry signals, avoiding false signals. At least that's the idea behind it. But without a test, we cannot know for sure which is the better one. So I decided to find out if it's really better than the original supertrend. I went over to ChatGPT and coded two very simple strategy scripts for TradingView. Both of the scripts will have one trend filter indicator, the EMA, to make sure we allow trades only in the main trend direction. The stop loss will be placed at the super trend lines, and the take profit at a set risk-reward ratio level, which will be 1 to 2. The only difference between the two scripts is the SuperTrend indicator. One will use the original SuperTrend and the other the pivot-based SuperTrend for entries. In this video, I will show you the two strategy scripts, explain the entry and exit rules, and reveal which is the better SuperTrend indicator overall, the original or the pivot-based. Then I will show you the best performing setups too, and the best part, I will share the source code of both strategy scripts with all of you for free. Without wasting any time, let's get right into it. Okay, so now let's head over to TradingView and let's see these indicators. For the normal supertrend, just type in SuperTrend and add this one to your chart. For the pivot-based supertrend, type in Pivot Supertrend and add this one to your chart. Okay, this is how the normal supertrend looks like if you open up its settings. You can set up the ATR period at the source and the ATR multiplier. On the chart, you will see buy and sell signals with an ATR baseline that moves up or down depending on the price movements. Now let's see the pivot-based supertrend. The pivot-based supertrend has these settings. Now here you can change the source, but you have another parameter, the pivot point period. The larger this value is, the longer the script will look back to swing lows and swing highs. So if you only want to use the more significant swing lows and swing highs for this supertrend, you need to set this value to a higher level, for example 10. For me in my backtest, I picked 10 as my base pivot number and I checked 5 and 20. On the chart it looks just like as the normal supertrend, you get buy and sell signals with a line that moves with the price. Now if we apply both of these indicators on the chart, this one is the pivot-based supertrend, and this slightly darker green color one is the normal supertrend. Now what you can see here is the normal supertrend gives slightly more entry signals using the base settings. So for example here you can see that the pivot-based one gave only one buy signal throughout this period, while the normal supertrend gave one here and one here. Okay, but how will the strategy work? For the strategy, we will use another indicator too, just as an additional filter, which is a 200 length EMA. For that, just type in EMA and look for the exponential moving average, this one. Entry rules are very simple. If we get a buy signal and the price closes above the 200 length EMA, which is this blue line, then we can enter into a long position. The stop loss will be placed at the SuperTrend indicator, right there, and the take profit will be at a 1 to 2 risk-reward ratio. I only tested 1 to 2 risk-reward ratio as that seems to give pretty good results, but you can try different ratios too. On the other hand, for short entries we are looking for a sell signal and the price needs to be under the 200 length EMA. In this case we got the sell signal, but the price was above the 200 length EMA, so this is not a valid entry. Let's find a valid short entry, this one for example. So we get the sell signal, price closes under the 200 length EMA, so we can enter into a short. Stop loss will be at the SuperTrend indicator right there, and the take profit at a 1 to 2. Right here. In this case this trade was a loser, but don't worry, that's not the point of this video. And the same are the rules for the pivot-based supertrend. It also prints buy and sell signals, so this would have been a valid short entry. This is not a valid long entry because the price closed under the 200 length EMA. But this would have been a very long entry. Okay, now you know the rules of the strategy that we are going to test. As I said, this is one of the simplest strategy I ever presented here. But the point of this video is to find out if the pivot-based supertrend is better than the normal supertrend. And now let's see how I tested the two SuperTrend indicators to find out which is the better one. I tested the two strategies with 3 sets of parameters on 3 timeframes and on 3 assets. Considering the parameter sets, I tested a fast reacting, a normal reacting, and a slow reacting setup. These are the fast reacting, these are the normal reacting, and these are the slow reacting setups if you want to copy them. Obviously, the fast reacting will give entry signals more frequently than the normal reacting, and the normal reacting will give more entry signals than the slow reacting. So if you are a short-term trader, the fast reacting will be good for you, and if you are a swing trader, the slow reacting will be good for you. Considering the assets and timeframes, I tested BTC/USDT, Microsoft stock, and NQ1 or the US 100. I tested the 10-minute, the 30-minute, and the 2-hour charts. So the total combination is 54 backtests, 27 tests for each strategy script. And for trading fees, I used a 0.1% on each entry and exit plus a 2-tick slippage for BTC/USDT and Microsoft. And for NQ, I used a 2.5 USD per contract fee plus 10-tick slippage. And the backtesting time interval is the latest 20,000 candle. To decide which super trend is the better one, we will check all the 54 tests, and whichever strategy gives the better results for a time frame, asset and parameter set combination will be the better one and earn 1 point. And now let's see the results. And here are the results. I went over all the 54 backtests for all the combinations I mentioned and collected the backtest data into this spreadsheet. In the first column, I put the setup name, if it's a midterm one, a short-term one, or a long-term one. Here I collected the setup values, so the parameter settings, here the asset and the time frame, and here is the net profit in percentage, the maximum drawdown in percentage, the number of trades, profit factor, and the net profit divided by the maximum drawdown. As I mentioned earlier, this is the value that we are going to focus on. The higher this value, the better the strategy is. But generally, the profit factor is also a good metric to use if you don't want to use this net profit divided by maximum drawdown. Each 2 rows stands for one combination. So this is for BTC/USDT 10-minute chart using the midterm setup settings, for the pivot, and for the normal super trend. This is another set of combination, again using the midterm, the BTC/USDT, but now on the 30-minute chart, for the pivot-based and the normal-based super trend. Here I collected the points for the pivot-based super trend, so if the pivot-based super trend performed better than the normal-based super trend, then here you should see a 1. In this first combination, that was not the case. Here the normal super trend performed better. But on the next combination, the pivot base was better because it had a 0.1 net profit divided by maximum drawdown ratio compared to the normal super trend's negative 0.86 net profit divided by maximum drawdown ratio. But now let me reveal the results. So after counting together all the points for the pivot-based super trend, here you can see the results. The maximum number of points that the pivot-based supertrend could have achieved or the normal-based supertrend could have achieved is 27. Out of these 27 points, the pivot-based supertrend took 18 points, which is 2/3 of the maximum number of points that it could have got, meaning 66%. Comparing it to the normal supertrend, it only got 9 points, which is only 33% of the points. So based on this backtest, we can say that the pivot-based supertrend is actually better than the normal-based supertrend. Okay, but now let's take a look on the 2 best performing setups, which I think was this one and this one. Keep in mind that this is not an optimization. I just tested a few parameters randomly. As I mentioned earlier, 54 setups. So I'm pretty sure that you can achieve much better results if you spend some time optimizing these strategies. Also keep in mind that these strategy scripts are very basic. You can easily improve them by adding a few momentum filters, a few trend filters, a few volume filters, or one of my favorite ones, the TDFI. Again, if you want to know which are the best indicators on TradingView that I found so far, just check the link down in the description and look for a playlist named Creating the Best Strategy series. Surprisingly, the 2 best performing setups were made using the normal super trend. But not surprisingly, both of those setups are for NQ1 on the 2-hour chart. A general advice and my experience, trading on higher time frames is always easier and you can get easier profits there compared to trading on the lower time frames. Also, indexes like the NQ1 or S&P 500 are one of the easiest ones if you like to trade long direction. Okay, this is the first setup using the midterm parameter settings. And those settings are these. So we are using the original 10 ATR period with the 3 multiplier for the normal super trend with a 2-to-1 risk to reward ratio. We trade both longs and shorts. Here you can see the position sizing and the commission rate, which is 2.5 USD per contract and the 10-tick slippage. And the backtest results are here. During the last 90 days, let's see the results. In 90 days, it took only 4 trades, but 3 out of those 4 trades were winners, and it generated a 10% net profit with only a 2% maximum drawdown. In the last 365 days, it took 25 trades, but only made 12%, which is pretty low considering its 1-year period, with an 8% maximum drawdown and a 1.5 profit factor. Now let's see the last 4 years, which I usually like to check. So we are going to go with 2021, the 5th of July, till 2025, the 5th of July. And here you can see the results. So in 4 years, even the best setup out of the spreadsheet I showed you could only make 28% net profit with only 12% maximum drawdown. That means that you can increase the position sizing if you are comfortable with a higher maximum drawdown. For me, 25 to 30% is bearable, but I never like to go above 30%. That's a bit too risky for me. We got 126 trades, a 1.2 profit factor, which is decent, but not good results at all. Again, this is not an optimized strategy. If you want to work with this, make sure to go to ChatGPT and add a few more indicators like the candle momentum with EMA, the TDFI, or a simple volume with EMA filter. Now let's see the other setup. As I mentioned, the other setup is also for the 2-hour chart on NQ1 using the normal SuperTrend based script. And these are the settings. These sets of parameters are the longer term parameter sets with a 20 ATR period and the 6 multiplier. The properties tab is the same capital, the same order size, the same commission, and the same slippage. Now during the last 4 years, this version of this strategy took 74 trades, made 32% net profit with a 20% maximum drawdown. Now you can see that 32% is higher than the previous version, but this one has much higher drawdown. So technically, if you increase the position sizing of the previous version, you will get around 45% net profit with around a 25% maximum drawdown. The profit factor, I think it's a bit higher here, 1.3, but it's still low for me. I like to see at least 1.4, and the trade count is only 74. Let's see how it performed in the last year alone. In the last year, it only made 5% net profit with a 16% maximum drawdown. I don't like those results at all. The last 90 days, and in the last 90 days, there were no trades, probably because it's the longer term setup. And to close out the video, how you can get access to these strategy scripts? Well, it's pretty easy. I will leave you a Google Drive link down in the description where you can download both of these strategy scripts. Once you find that link, click on it, you will find there the 2 scripts. Copy the script, come back to TradingView, open up Pine Editor right here at the bottom, click here, then to create new and strategy, highlight everything here, delete it, and paste the code right here. Finally, you have to click on the Add to Chart button. If you've done that correctly, you will see the strategy script right here. The pivot one says Pivot Supertrend, and the normal one has the SuperTrend only. They will look like this, and you can start backtesting, optimizing, and using them as soon as you want. Make sure to check out my strategy ranking spreadsheet too, which is also linked down in the description, where you can find all the strategies I've tested on this channel, and most of them has free strategy scripts. And if you want to support my work so I can bring you more free strategy scripts, visit my Patreon shop where you can buy more complex strategy scripts, private coding, and private optimization. And that wraps up today's video. If you like this one, don't forget to support me with a like and subscribe. If you're interested in which strategies are performing the best after the optimization date on live market data, check out this video on my main channel. As always, thank you all for watching, have an amazing day, and until next time, trade smart.